Hey traders, and welcome back to Ifxsuccess, and welcome to part 1 on how to understand the EA that you can make better decisions. So the first thing is, this is going to be a summary of what we're going to be talking about on the next following videos. So again, the EA is formed, or it was made with two types of blocks, right? The reversal block and the trend block. And pretty much they both work differently, so you have to understand there are a couple of videos on each one of them on how they are calculated pretty much, and how each one works differently. So the first decision that you always have to make is which one of these two are you going to trade. And on the following video, we're going to talk on detail understanding the reversal block and the trend block in regards to settings, because pretty much we can trade just the reversal block on the trend block without any other indicators. So I'm going to go on the next following videos how to work on that. So the next thing that we have to think about is, do we want to enter on a block entry? What is the block entry? That means the first entry or the first alert that we get when we get a reversal block alert. Or we have to decide if we want to enter on a block retest. That means that it will be the next following entries, second entry or third entry when the market reverses or tests that block. So, it will be a retest of that block, okay? And the same thing goes for the trend block. So pretty much what we can do is we can trade 5 minutes, just trading looking at 5-minute time frame, and we can trade either one of these two blocks, or we can trade 15 minutes, 1 hour, and even 4 hours in a daily. So I'm going to teach you again how we can trade only by just looking at the blocks in one time frame, and what kind of filters we can have within that time frame that we can make better decisions. Now, the EA is designed or have different filters that I have put it in there, so that way that we can make pretty much, what does this mean is that reversal block and trend blocks, if you're looking at 5 minutes, it can give us around per day, maybe let's just make it even 10 entries, right? So if the reversal block gives us 10 entries as usual per day, or either one of these two per day, then that would be too many blocks, right? That would be too many entries, and we pretty much will go crazy thinking about which is the one that is going to work. So out of 10 entries, maybe 5 will be good and 5 will be bad. So a 50-50 probability, or 6 or 4, it really depends. So now when we add filters to it, it doesn't mean what it's doing is we're reducing the amount of entries. So now instead of getting 10 entries without any filter, if we add a filter, instead of 10, now we can have 5. But if we have 5 entries, it does not mean that all the 5 entries are going to be 100% winners, right? It's still going to have a probability of either 50-50 or 60-40 or whatever it is, but we're still going to have a probability of a losing trade. So just by adding filters, don't think that we're going to add better probabilities. It's just that we're reducing the amount of entries that we actually get throughout the day. Okay, so think about this. Under the 5 minute, we might get 10 entries, block entries, alerts. We're not going to take them all. On 15 minutes, we might get 6 entries, 6 alerts. And on 1 hour, we might get, maybe like 4 alerts. On 4 hours, we might get 2 alerts per day. So this is all per day. So when we add filters to it, we're going to reduce the amount of alerts that we get. But it does not mean that we are those are better entries, okay? That doesn't mean that. We still have to look at the market and see if those entries are actually good entries. Now, we have level 1, I call them level 1 indicators or trend, right? Trend indicators. So this is going to be level 1 trend indicators, and what type of filters we can add to reduce the amount of entries we get. So we have higher time frame blocks. On the higher time frame blocks, we can choose reversal block, and we can choose or the trend block, and we choose a higher time frame as a trend. So if you trade in 15 minutes, then that means you can use a higher time frame as a trend to follow, whether it's 1 hour or whether it's 4 hours. Okay, so if, for example, we choose 1 hour and the 1 hour is a bullish block, that means that now we are going to look only or get alerts only if we get bullish blocks on 15 minutes or 5 minutes. So that means we're reducing the amount of entries. Now we're going to ignore any sell entries, and now we're going to be looking only for buy entries. So that is reducing the amount of entries that we get per day. So this is one filter, which again we're going to go in further detail on the following videos. Okay, now we have moving average. Moving average also acts as a trend. We can use higher time frame moving averages. Again, we can use any other time frame as to follow, and then also we can use any type of moving average. We have many moving averages, exponential, simple. I mean, there's so many out there, different type of numbers. There's some people use the 50 moving average, 200 moving average. So we're going to kind of go in detail what type of moving averages we can use to use as a filter when entering the reversal blocks or trend block. Now we have also the MACD bars. The MACD bars, we can also use them as a trend. So we can use higher time frame MACD. Let's say, again, if you entered on 15 minutes, then what we can use is we can use 4-hour MACD bars as a higher time frame. So for example, if the MACD bars on 4 hours are above the zero line, then we're gonna be looking only for buying opportunities on a smaller time frame. Okay, so that is very simple. And the opposite, if the bars are below the zero on a higher time frame, then we're going to be looking only for selling blocks on a smaller time frame. Now we have the mid-level. The mid-level is called daily mid-level, is one that I go very often on the class, on the Telegram, and that means is that we're using the daily mid-level as a higher time frame or as a trend. Okay, again, you're gonna be able to see it more in detail later on. So now, one of the things that you have to think about this is that when you choose one of the reversal blocks, so let's think about reversal block. So now we choose a reversal block, right? And we say, okay, I want to trade the block entry. So it goes from here to block entry. Let me just change the color in here to something else, to red. So we choose the reversal block and we choose block entry. Then we have to make a decision on what type of trend, because we can't really choose 2 or 3 because thinking that, the more filters I have, the better entries I get, and not necessarily. Okay, so that's when you have to think about this. So we have to either choose one of these 4, or the only one that we can mix up would be the mid-level with any one of this. But I highly suggest choosing, let's say higher time frame blocks, and then also maybe the mid-level. Okay, that could be one combination. So this will be the level 1 trend. We can actually use and trade just a block and a level 1 trend indicator, right? One of these indicators or filters that we have in here. What if we want to use then just a block entry and maybe a higher time frame moving average? So this would be a one combination right here. You can choose, like I said, we're gonna go in detail. You can choose 200 moving average or 50 moving average, etc. But don't choose like higher time frame block and moving average and also the MACD, thinking, okay, the more I choose, the better it is. No, don't think about that. Okay, now let's move on to the level 2, which will be the extremes. Okay, what are the extremes? The extremes are when the market pretty much is overbought or oversold. When the market reaches to really high levels or really low levels that the market should potentially turn around. So this is more extremes, right? We're not following trends, and here we're mostly looking for when the market extends too much, and it should be able to give us should be able to turn around some type of small reversal, if any, or a bigger reversal, but at least we're looking for a reversal in here. So again, this will be the level 2. So now we can choose a block entry, whichever. So we can just say, regular trend block, a block entry. We can ignore one of these in here and then quickly just jump to the RSI. So the RSI, again, mostly everybody knows what the RSI. If overextends over the 70, then we will sell. If we oversold on 30 level, then we should be looking for a buying opportunity. The ADR is very simple as well. It's pretty much the average daily range. How much does the market usually move per day? Well, here it will be divided by 10 days. So this is an average of 10 days. You can also use 14 days. Again, we're going to use in detail later on. But we can use a percentage. And if the market extends, let's say 100% or 125% of what it usually moves, then we're going to be looking for a selling or a buying opportunity. Now we have the Murray zones. This is a very, very interesting, I've been looking into it, and I think I find it very interesting to be able to filter trades that goes really into extremes. You should be looking more into this before so that when we go in detail, you already have an idea. The Murray math lines, I call them zones. We have different type of zones, from 8 all the way to 2. So if it goes 8-8 will be an extreme, and if it goes 2 to 8, which is low extreme, we will look for a buy opportunity. So don't get confused, but this is pretty much extreme indicators. Okay, so we can choose ignore. Let's say we can ignore any trend indicator and quickly jump into, let's say, Murray zones, right? So this would be one opportunity to enter. So we can just use a block entry and then just enter on any Murray, extreme zones, or we can actually maybe look for a block entry and then maybe ADR. ADR works great with scalping opportunities. This would be, Murray would be more for if you trade 1 hour or higher time frames, will also be nice. And the RSI, well, again, the RSI can work well on either higher time frame or smaller time frames. The higher time frame, the better, of course, with any of this. The higher time frame, the better. Okay, so now again, you can choose. Now we can have something like a block entry and a let's say a higher time frame, and then maybe we could choose an RSI. So again, we have to also know what type of time frames we're going to be using. That's also very, very important. So block entry could be 15 minutes in here, and higher time frame blocks, it could be 1 hour or 4 hours, and then the RSI could be this under the same 15 minutes, right? 15 minutes. If it extends or overbought or oversold under the same time frame, then also would be nice to enter. So we have different combinations in here that we can really definitely play around, and we can also do just block entry and ADR alone. That would be for scalping. When the market overextends is ADR, so we can just pretty much say block entry and then ADR, and that's pretty much it. So that again is very simple. And lastly, we have the level 3, which is divergence. So divergence, we're using only the MACD. We can have different type of divergence. I made it really, really simple. Just looking divergence from prior day to current day, or even just current day. That way, because we can extend it, it could be very, it could get hard, to actually do a divergence on an EA. So it made it really, really simple. So the MACD divergence only works on the same time frame of entry. So again, if we choose a block entry, let's say on 15 minutes, and we choose just divergence to enter, then has to be on the same time frame on 15 minutes. So the way that I did the divergence was, if the MACD is going opposite than the price, then it's just gonna, again, it's very simple. It's just gonna look for an entry. So if the price keeps going higher and the MACD is going lower, then it's going to look for a sell entry when we get a block entry, whichever is reversal or the trend block. And so this will be working only on the same time frame entry. So it's very simple. You know, it's one of those things that I want you to really think about this and think about how is the EA really is going to work, or is actually working already. Again, we're going to talk about money management and different type of strategies, but I just want to give you a snapshot of what is it how the EA works, because some of you are really confused. You know, I know there's a lot into it and it could be a bit confusing, and I don't really want you to get confused. So we have three different strategies, or three strategies, which each strategy has everything. Every single one of these level 1, level 2, and level 3 indicators have the reversal and the trend block. So why did I do that? Well, the way I was thinking about it was that we can set strategy 1 to be scalping. So we can say, okay, so I want a block entry, trend block entry, and then I want RSI divergence. RSI extremes, right, on 15 minutes. So on second strategy, we could say I want a reversal block retest on 1 hour. Okay, and I want it to be Murray zones. Okay, so this could be one second strategy right here. So block retest on 1 hour, and then Murray zones, you know, when it reaches to extremes on Murray zones, then I can do that. Then I can also have the other strategy that I like a lot would be trend block entry with higher time frame blocks, and then also using the mid level. Okay, so that's one also that is nice. So that way we can have different alternatives. Why? Because the market behaves differently every single day, so that you don't change every strategy depending on market conditions. We pretty much have already three different type of strategies that you can set it to true or false, you know, activate it when you're ready, when you think you see something is really coming up. So that way we can just say, hey, you know, I think now maybe strategy 3 is going to be working on today or tomorrow. Let me activate it, and then you don't have to do anything with it anymore. You know, you just activate it and then that's it. So that was really the method behind this, that we have 3 different strategies with all the filters. That way each one of them has something different depending on market conditions. Okay, so now we just drew like a whole map in here. So that is very simple. Think about this, you know, stay tuned for the next following video. So on the next following video, all we're going to talk about is this reversal block and the trend block entries, and the type of, you know, block entry and retest of the block, and the different settings that we can use, because, you know, sometimes I do trade only these blocks without any filter whatsoever. So I'm going to teach you how you can actually trade them without any filters. You do have to be pretty much stuck to your computer and, you know, pretty much not blink, because it could be a little bit risky. You know, you can do some scalping with that. And then also I trade 1 hour without any other filters. So now when you have this type of filters, the way you use it is that, hey, you don't have time to analyze the market. You don't have time to sit around in front of the computer. So, or you get bored and sitting in front of the computer. So you tell the EA, listen, today I want you to do this. I want you to trade only 1 hour. Block retest, you know, this would be one block retest based on maybe MACD bars, you know, higher time frame MACD bars, and maybe also you can use for, you know, some RSI, you know, and then that's it. Or you can have also regular block entry on the 1 hour using Murray zones. You know, if it reaches to that level under the Murray zones, then it's going to enter for you. So that way you don't have to be stuck on the computer all day, and, you know, you just pretty much wait until those entries happen. All right, traders, so I hope this is helpful in regards to the EA. Stay tuned. We're going to talk about in detail how we can see all the different filters more in detail and what type of strategies actually work. Again, just think about this. Every single strategy works. It's just that, you know, there are different market conditions that sometimes the price doesn't go the way we want it. You have to think about this. We get an entry and you expected the price to reach to this base zone right here. We got a block right here, and the market, it did go down, but then after that it started going up. So it didn't reach your target, and it doesn't mean that it didn't work out. It worked out for a little bit. Unfortunately, it didn't reach your target. So that's one of the things that you really need to think about this. And I call them peak. We're looking for peak formations, and this is where we try to enter. So we can get another block over here, so we can get out and enter on this block right here. So that's pretty much when I say, we can trade block entries only without any other filters. But, the whole method behind the filters is that instead of getting 10 entries per day on 15 minutes, then we're just trying to reduce the amount of entries we get. But again, don't think about that just because we add in filters, that is going to be the best entry. It's still a probability of 50-50, or we can increase it by depending on market conditions. All right, traders, stay tuned, and I will see you on the next following videos.